Hi everyone, my name is Gurneet. I'm an investment consultant for P3 and P3 Wealth. P3's overarching mission is to service the international clientele in the high net worth and ultra high net worth field in banking style services as well as investments. So on the payment side, we've got payments, FX, multi-currency cards, debit cards, interest accounts or access to interest accounts. And on the investment side, we are very forward thinking in how we involve technology and democratizing investments to our client base. So we have a self-directed trading account and trading platform, as well as a treasury platform for corporates.
Hi, I'm Tom Gearing, the CEO and co-founder of Cult Wines. Cult Wines is one of the leading fine wine investment companies globally. Founded a business over a decade ago, and today we manage more than 300 million wine portfolios on behalf of high net worth individuals around the world. And really what we do at Cult Wines, and the mission for Cult Wines when we started, was essentially providing investors accessibility to an alternative asset class. Wine is clearly a niche asset that sits within a collectible sleeve, which sits within the sleeve of alternatives. But I think it goes without saying, over the last 10 to 15 years, we've seen a significant increase in investors' appetite and allocation towards alternatives as people are seeking diversification and they're seeking alternative sources of return.
First Fed meeting of the year, big anticipation. It came after the fastest ease of financial conditions in 40 odd years, and that was over 2 months. But I think the main question is they've got a very difficult balancing act. How do they balance the recession fears, the slowdown fears, as well as trying to keep a lid on inflation? And they are fully aware that the data has still some fault lines, shall we say. We've got huge treasury fiscal policy spend. We're talking about 2 trillion a year. There is an expectation, political pressure to spend on things like social care, on climate, on industrial policy. Balancing all these things together, it is difficult. If they can balance it out with a soft landing as well as getting inflation to where they would like, then we are looking at quite possibly one of the most remarkable bits of maneuvering by a central banker, definitely in the last sort of few decades.
In 2024, as we start the year, do you think there's a topic or a theme that's more important for investors right now?
I think investors are very much focused on Fed policy, the dot plots, where is interest rates leading, what's the forward-looking projections. The markets are actually expecting far more rate cuts than what the Fed is suggesting. In my opinion, I think in the last quarter we saw a level of exuberance. There was that excitement. Reality could set in because if there is a recession fear, that's definitely going to hit the equity markets. But I think everything thus far is dedicated to where are yields going to be, where are rates going to be, are we going to get that rate cut? And what is the reason for that rate cut? Is that because we've achieved that soft landing?
What we've done at Cult Wines in our research and analysis is actually looked and evaluated sort of wine price performance over the last 10, 20 years and looked at the periods of obviously growth and the downturns. So generally what we've seen is, as we saw this significant boost to the global money supply, we saw wine prices sort of 10 months later start to skyrocket. And then when they started bringing down and started implementing these policies from sort of late 22 into 23, really decelerating, we saw prices for wine actually peak and then start coming down. And that's where we are right now. We're sort of in the end of that cycle. 2022, the wine market, on average, in terms of fine wine prices of the most collectible investment grade wines in the market, went up almost 20% in 1 year. And to put that into context, 2022 was the worst year since 94 for fixed income. In 23, we've just seen wine prices fall by around 12 to 14% this year on average across the board. But, our feeling is that we're probably going to see a soft market for wine, maybe for the first quarter this year. I don't think we're at the tail end of that sort of deflationary period. And then I think just as things start to recover, maybe a bit more confidence comes into the system, a bit more liquidity comes into the system, maybe things will start stabling and start flattening off probably Q2, Q3. And I think we're really looking to sort of the end of the year for maybe the bottom of the market having been found and maybe starting to push on and starting to see prices stabilize a little bit in the wine market.